Thank you so much, everybody, for tuning in to this call today. I am here with a very special guest. His name is Bontha, and he's going to introduce himself. But my name is Brett. I work with Sense Financial. This is about my client and my friend, Ben, and we're going to hear from him primarily. I'm going to kind of ask some questions, and we're going to just free flow the conversation and see where it takes us. But before we get into that, Ben, thank you so much for being here. Really appreciate it.
Thank you. Thank you, Brett. Happy to do this. I've been in the investing journey for a long time, and I seek advice from a lot of people. So I'm very glad to do this and also give my perspective and what I go through to get to wherever I am at and wherever I'm going. Without people's advice, we won't get there.
That's right. I think we can learn from people's wins and their mistakes and maybe get there a little quicker than they did, right?
Yeah, mostly the wins.
Exactly. Well, cool. Do you mind giving us kind of a short version of your background and how you got started and what you do? You said real estate, so.
Yeah, so by occupation, I'm an engineer, but after various industries like in manufacturing, I went through computer-aided manufacturing and an entrepreneur. And then the last 26 years, I worked for a major corporation, and then I left almost 4 years ago. And since then, once you left the professional career, obviously you don't want to go back to work. But because I am an entrepreneur, I wanted to get into managing my money and how can I do it successfully. The portfolio that I manage right now for what I learned, the first important thing I learned when I left my professional career was, you get lost for a while, but you just say, what is it that I'm supposed to do next? So me and my wife, we set up this home office concept in about 5-6 years ago. And then that gave us the discipline. And when you say home office, it's not just talking about just the managing the money, but even the setup, like you got to have a special place in the office. So she has her own office. I have my own office, and we work on things like that. So that's how we start.
Okay, great. Yeah, thanks for sharing. What does your day-to-day look like?
It's mostly like what I do. I think the number one thing that I learned is networking and networking and networking. So daily, I make sure I meet at least one person. So yesterday I met a real estate syndicator. I spent the afternoon with them. Just like you need to get out there, which is like one of the most hardest thing for a lot of people to do, especially for introverts like me. It's a push. You got to push yourself to go because you can read about investments all day long, but that doesn't really. It's great knowledge. But meeting people, seeing what they're doing, expanding your network is my focus on a day-to-day basis, every day.
Okay. What a simple goal too, right? The power of one, right? One new person each day. And, that has a compounding effect over the course of time. You might not meet people 7 days a week, but, 4 or 5 days a week, you're meeting one person a day, and that adds up to a lot of people every year, right?
And then the compounding effect, just because you're out there, and usually somebody, like yesterday, I met the real estate syndicator. So he introduced me to the due diligence team. So you get to talk to them. So you need to understand what do they do in a multifamily apartments? Like, what are they doing? Mm-hmm. What are they looking for? Because it's just not like, okay, we got 100 unit building, an apartment, and the rents and this and that. But you need to really understand, of course, the vintage, what to look for, what are the things happening. Not that I'm going to go run something, but at least when you're looking at all the reports, you understand what are the maintenance aspects of it. Why aren't they achieving the objective that they set up to be? Because there's a lot of moving parts to just not renting an apartment, collecting rent and distributions. So you need to know what the details as well.
Sure. No, absolutely. We could probably have a whole series on due diligence on syndication opportunities, right?
In fact, one of the things that I learned in my professional career, over the 26 years that I worked for a major corporation, my job was to set up customer experience. I'm talking about year 2000 when I said customer experience, for this company, and everybody was like, what are you talking about?
Right.
Because today, customer experience, everybody understands. I'm talking about year 2000. So one of the things that when people always used to say, you're a micromanager. I said, no, it is called detail management. You need to know all the details. I know a lot of people have a different opinion about that, but I personally want to know all the details because the other person is careful about what they will tell you because you know your stuff. Have an opportunity to tell you a story that you don't understand.
Or tell you a fishtail, right?
Yes, I wanted to be polite.
Yeah, no, I knew what you meant, but that's okay. I like that. Yeah. I see that. It's funny because a lot of our clients are engineers. So I have found myself kind of having to dial up my analytical part of my brain, which wasn't always honed very, very sharply. Because I've always been the kind of like jump in and figure it out along the way kind of person. And engineers obviously don't really do that too often. And it started out with Dimitri, the owner of our company, who is an electrical engineer by trade, and then seeing just how meticulous he is with every step of the way with the client onboarding and just everything. And then to going and doing all these consultations over the last couple and a half years with so many people like yourself who ask a lot of questions, and they're good questions. And sometimes they challenged me. They don't challenge me as much anymore because I've heard a lot of them, but still there's some that come out of nowhere. And I'm like, I don't know the answer to that, but I will find out for you. And so I appreciate it. I appreciate the fact that engineers make up this country in a lot of ways and generally are very well off financially. And I would imagine the DIY aspect of self-directing your retirement fits nicely into the mold of an engineer's brain because you like to kind of have that control.
You could be your own worst enemy, though.
True.
So you got to be careful about that. So, don't be so set in your ways. Keep an open mind. That's one of the I think because in engineering, you get the training to be very linear thinking, very logical. But investment, although it could be like that, but there are certain aspects of it. I mean, I talk to a lot of people say, you heard the words, analysis and paralysis, and you don't do anything. I've seen a lot of engineers struggle with that as well because you can't keep on beating it to death. At some point, you got to have the networking ability, the general know-how to actually pull the trigger, which is one of the toughest things for a lot of the people. I mean, you got to take the risk.
Yeah, that's really good. How do you know when to do that?
So, I mean, I think, after talking, especially like, for example, if it's a real estate deal, let's just say I'm going to go invest my solo 401k, with somebody. It's clear that you need to really understand the jockey, what their background is. What have they've done? Like a lot of people get into real estate and they don't. I mean, they could be an engineer for their life, and now you're going to run a multifamily property. I would say that's tough. I mean, you can do all the numbers, but it's all about people management. You need to understand what all they have done in their life. Like, did they run a business? Do they have the business sense of knowledge, or they're just they were successful because they were a great engineer or whatever, good professional. But what? So when I look at the horse, I said before the horse is the property, but I'm looking at the jockey. Can the jockey capable of it? Because eventually I mean, if you understand racing, everybody has almost similar horses, but the jockey makes the difference. So you got to analyze the person and then the asset.
Gotcha. Yeah. And that's true in a lot of parallels, right? I mean, I look at my son plays club level soccer, and you can have kind of a mediocre team at the beginning of the year. But if you have a really good coach, that team will show vast improvement as the year goes on. And then it works the other way too.
Absolutely. That's true. You got to have some good plays as well.
Yeah. I love it. That's super cool. All right.
On that thing, why I say that, for example, when we entered the real estate market in 2020, 6 years ago, you know what happened? Like you got in and then the environment changed with 14 interest rate changes and all that. Now, we're all new to it too. And I've seen although a lot of people face a lot of things, I mean, we are also facing, in the analysis that I've looked at certain people, they are solid. They're able to withstand and retain the property of course, struggling, but they're at the pinnacle right now where we're probably going to take off. Maybe in a year or two it'll get better. So the jockey was the key thing there. The property was also there, but you really need to look at them. Are they capable of withstanding several setbacks, and how do they handle it?
Yeah. That's so important too, especially in an interest rate changing environment when it's going up, because I've heard a lot of stories. I don't want to say a lot. I've heard several stories where investors have lost money because the interest rates went up and the operators didn't foresee that and plan ahead, or they, maybe the interest rate, locking the rate at a lower amount for an extended period of time was too costly, and they came back for capital calls. And, not everybody has enough money to satisfy a capital call, and that's a whole nother issue that could occur. But yeah, it's that's so important what you just said. And syndication is a whole beast by itself. I think there's a lot of trust involved in that operator. And furthermore, people should not be afraid to conduct a background check on somebody that they're considering giving money to like that. All the general partners, for that matter. There's nothing wrong with that. They should happily submit to that background check if they have nothing to hide. And if they don't, then that's a red flag.
Yeah. I mean, you do thorough analysis, but there's always the unicorn out there that in a bad way you'll find some people as well.
Sure. Yeah. No. Absolutely. Yeah. Thanks for sharing those thoughts. That's really really helpful. I appreciate that. I think a lot of people will benefit from that short conversation we just had about analyzing operators and that sort of thing, and not maybe getting stuck on the paralysis analysis. Yeah, good. What over the last 6 years or so, or not, maybe even before that, are there any outcomes or successes that you're kind of like most proud of? What comes to mind with that professionally?
A couple of things. For example, when we just talked about the crisis, about the interest rate, etc. But in 2008, that was a big hit for, and I think probably not that we're not going to see it again, but I mean, I woke up in the beginning years of investing. I was doing a lot of the dividend reinvestment programs, buying fractional shares of companies. And I set up my own portfolio from GE to Walmart to all that. But at some point, I started giving management of my portfolio to external people, and I kind of slept at the wheel. 2008, we lost a lot of money, right? Obviously, that crisis. I said, oh, this is something you just don't outsource to people. You think they're all professional and all that, but you need to stay involved. And I think that taught me an important lesson, saying, oh, you can't just, like anything in life, you can't just let somebody else do it. You need to stay involved, see what's happening. And I think that was one of the biggest moment that changed everything for me.
Gotcha. Yeah. Yeah. I think that era had that similar effect on a lot of people. Although I will say, solo 401ks, self-directed IRA, solo 401k has been around since 2002, IRA since 1974. So a long time. And, Sense Financial started in 2010. So it was kind of like right after that great recession that everybody went through. But there were a lot of people who were self-directing already before Sense Financial was around. And, depending on, and I've talked to some of these people, depending on what they were invested in, typically they weathered that storm pretty well because they were investing in alternative assets that were not necessarily subject to the whims of the stock market, right? Yeah. The value of real estate went down for sure. Obviously, it's come back and some. But if it was private lending primarily, did some people stop paying the loan? Yes. There were some messes that had to be cleaned up. But there were a lot of situations where that money just kept coming because people were, they were paying on an agreement that they had for borrowing money. And, it was not as clean as I'm making it sound. But my point is, when you diversify accordingly, and I'm talking about true diversification, I'm not talking about mid cap, low cap, high cap, that sort of thing in the stock market. I'm talking about some stocks, mutual funds, ETFs potentially, and some real estate, and some syndication, multifamily, and some private lending. That's the type of diversification I'm talking about. I'm curious, is that Is that kind of what you're referring to, or did that not
Yeah.
really start until about 2020 for you?
2008, from there we started looking like, I mean, we were all immersed in the stock market. Then we started looking at real estate. We bought an investment property and then started. But the thing is, I was still working, kind of couldn't completely jump into it.
Sure.
But later on, I said, oh, you gotta leave. So 2018 onwards, I was planning to leave the professional career and work more in managing. I mean, I think, so one of the things I'll tell you, if you're talking to, I mean, I'm not trying fault with anybody, but there are if you have an advisor, you're limited to their knowledge, right?
Mhm.
Sometimes because if they know only stocks and bonds and they read a book saying, hey, when you're now, this age, so this it says like you take 100, and if you're 50, then 50 has to be this 50, and I'm going. All those things are not for everyone. I mean, I'm not going to say that it doesn't work, but that's all they know. Then we talk about. I'm talking about, like, for example, how do we do this Roth conversion? Because that's what I was focused on, and then got into the solo 401k. Now I understand. Even there, the knowledge is not there still for people to. How do you go about it, and what is the best way to do it?
Mhm.
You take your IRA, how you create your solo 401k, then how do you invest and how do you manage it? So it's something that it's a very I would say not a common knowledge out there. You don't find that many people that know. So, and you can read all about it, you know, through AI and the internet, but there's still intricacies of that you need to talk to people
Mhm.
and really, really understand it. So not one financial advisor can help you with everything that you're doing. Like, so today we have, of course, the market and equities are, one aspect of our portfolio, real estate, solar 401k investments, then oil and gas, how we are going about this. You need to be really out there learning, but
Mhm.
a lot of this alternate other than the equities.
Right. Right. Yeah. Well said. Well said. Your wife is a real estate agent, right?
Yes.
Yeah.
She ventured out in 2010 to be a realtor. Then she moved on to become a broker as well, and then that's how we established the company, Bontha Property Group, that allowed us to open the solo 401k. That's the strategy that we took. She's not an active realtor. She only does it to only the closest friends and family. That's it.
Gotcha.
Because we don't want we don't want to be bogged down with real estate transactions
I see.
because we're invested in real estate. We
Yeah.
want
Yeah.
to manage the passive investments in real estate. We have several passive investments, and this, the networking aspect, and that's very important. Like if you're has to be involved, you can't just go, one is working on this and the other is somewhere else, because
Right.
both of you have to understand, be on the same page on many, many of these things, which is very, very important.
Yeah.
But
Yeah.
I mean, in fact, it's a very common thing I run into. They say, no, my husband is not interested or my wife is not interested.
Mhm.
I'm here alone. I said, no, I said, if it's not both of you, I mean, you get to try. I know sometimes it's boring for a spouse, right?
Mhm.
It's like they don't want it or, whatever. But I said, don't do it unless you both are there, because very, very important. Because you're talking about diversifying, putting a lot of things out there, and something happens to one of you, at least the other person knows what was going on.
Absolutely. Oh, no, 100%. Succession is important. Well, and furthermore, I don't know about you, but my wife has a level of intuition that I don't have. I think part of that has to do with my optimism, which has gotten me in trouble in more than one occasion. And she is a little more realistic when it comes to what the results are likely to turn into and be. Whereas I'm like, this is going to be great. We're going to make $1,000,000. It's going to be awesome. And she's like, whoa, pump the brakes. Okay, come on now. And so I found when I listen to her, we rarely get burned, maybe never. And when I don't listen to her, then, sometimes we get burned.
Yeah. In
Yeah.
fact, being a realtor, she was a paralegal as well.
Oh, okay.
So we run into a lot of these documents, and as an engineer, it will take me forever to read through any of the stuff.
Sure, sure.
She can glance through and tell me exactly what questions to ask, what are
Oh,
and,
that's
and
great.
that's the aspect that keeps a lot of people not reading. You should read because every one of them has something in there that is most detrimental to you than the other side. So it's very important to read.
Ain't that the truth? Okay, so I got my real estate license in 2014. I still have it, but I don't really practice real estate as much, kind of like your wife. And I remember, the residential purchase agreement here in California is 20 pages when you include all the disclosures that are attached to it that are built in. And I remember the first time I read it, and it was like, oh, it was so painful then. It was like Chinese to me at first, and once you do that though, and really, this is that paralysis analysis conversation. For me, I really got to know the purchase agreement and all the ins and outs of it when I started making offers on behalf of clients, explaining the contract to them, because much like the engineer clients ask me questions about SOLA 401k, checkbook IRA, I have to go find the answer. Well, the same thing happened with the purchase agreement, and it forced me to learn. However, if I would have just kind of sat on the sideline and just read it and left it at that, first of all, I would never have made me money in real estate. Second of all, I really wouldn't have known how the contract works in real life scenarios. I could just see it on paper and kind of guess and maybe talk to some people. But until you go through it a few times, you really don't know how important, a certain number of days of escrow period or a certain period of time to do all your due diligence, how it really affects the transaction as a whole. And I would imagine, for your wife being a paralegal and reading contracts, they have some similarities, but also reading the same contracts over and over again, you kind of know what to look for. So I can totally relate to that, at least in the residential real estate world. So I'm glad you said that. Yeah, glad you said that. I wanted to ask you too, if you could, what would you tell somebody who's kind of like getting started? Like, what's the one thing you might tell them, who's thinking, whether it's, residential, commercial, just real estate investing or investing. I don't care what kind of investing. What would you say to them?
I mean, including my own children, we try to educate, right? I mean, one other question I think just this week, we were talking to the kids, I said, and my wife asked the question, when do you plant a tree? It's like, the question was like people just going, what do you mean? Well, obviously 30, 40 years ago, because for it to grow. And even today, right? I mean, so don't wait till tomorrow now. You can plant a tree even today. So part of the beginning investors is like, they get stuck, right? In the sense like, what do we do? I said, so like, for example, when I was telling my own kids, so when I started, like just a simple dividend reinvestment program, right? All you do is put, I don't know, just said $1 a day, I said, and just every month $30, you buy a fractional share of, I don't know, whatever, put a bucket of stocks and just keep buying. Just start it. Don't, it will compound it. You'll see something. I mean, pick an index fund, pick any of it, doesn't matter. I know because you can't take 50,000 and put into real estate because you don't have it, right? That's how you start. Plant the seed, let it grow, and you'll see the returns. Will encourage you. Don't keep thinking how do I get to $1 million, and put realistic goals, right? I mean, what do you say, the biggest marathon or whatever starts with the first step. Take the first step,
Right.
and then go at it, because quite often people say, well, I want to be a millionaire. I said, how do you do it? I said, it's almost like how do you eat an elephant kind of thing. You just piece by piece.
Yeah.
And then once you start, you will see. And I think if I go back 25 years ago, whatever, whenever I started that, you're working, you got 2 cars, you got a house, you got kids. Everybody said, I learned it from somebody, I can't remember who it is, but they said, name every dollar you have. Where is it going? This dollar is going to go to the car payment. Name every dollar. So, and make sure you pay yourself first. And I didn't understand that, 30 years ago, 20. So then I said, oh yeah, you know what? You get paid, but pay yourself from there. And at first I set the margin to be 5%, 10%. As I kept, growing, getting promoted or whatever, I started increasing that. Like his money, I don't see it. So as high as 25 to 30%, I said, I paid myself. That means I put it somewhere else. I didn't see that money. Please stock it away. You invest, let it go. You just live, keep living in, the lifestyle. Make sure that you can live a great life, but also, don't starve yourself, but make sure you save enough to live life the way you want to live in the future as well, right? So that's very important for anybody starting. Don't get discouraged. Stay the course. Set flexible goals. Don't be so rigid,
Mhm.
but you'll get there. But
Mhm.
he gets to start somewhere.
I love that. And I don't want to gloss over that either because you said a bunch of stuff, but I think one of the most important things, if I may, was being intentional about where your money is going. And what you described is what Dave Ramsey calls a zero-based budget, right? You get down to every dollar having a home, and at the end you have zero left, right? Everything is going somewhere, whether it's groceries or restaurants or movies or utilities or real estate investing or the stock market or whatever. Everything goes somewhere and you're intentional about it as opposed to just kind of letting life happen to you.
Yeah, in fact, that's right. In the late 90s, that was Dave Ramsey. I used to listen to his radio show, and I learned a lot. But nothing against his philosophy, but I didn't. I disagree in certain aspects. Like debt is good. I mean, I think you should
Okay.
have debt, but
Yeah.
he's talking about things which do work for a certain segment of people. But some of us are built differently. You want debt. Don't be afraid of it. Because how many times people have asked me, is your home paid off? I go, no. Said
Yeah.
I got a 2% loan. Why would
Exactly.
I pay that? And they go, I thought, you should have at some point. They go, no. I said, never have a paid off home.
Yeah.
But that goes against a lot of the teachings. And I go, no, you just let it ride. You just don't need to have a paid off home at all.
Right. Yeah. Yeah. That's like syndication due diligence. We could have a whole conversation about OPM and Dave Ramsey. What okay, if you could name a book or two that people should definitely read, what would you say?
You know what? I'm not big on the book reading.
Okay. Or maybe a favorite podcast or something. I don't know.
I mean, I listen to a lot of things. Like I said, not just necessarily,
Investing.
it's radio shows and a lot of different things. One of my favorite things were always reading about companies. So I like to read about what how companies are doing, how do they get to where. So business from the business side has always been that aspect. So I know a lot of people talk about books, but I'm not a book reader. You can't. I don't have that much attention span.
Gotcha.
But I like. I mean, because it is very simple. Make it those, a lot of people want to make it very, very, very complicated. For example, set a goal, keep it always simple. I mean, for example, a lot of people ask me about customer experience. Oh, did you read this book? I said, no, I didn't actually. When I was telling people about customer experience, people said, what the heck is it? And I just said, it is about simple things. It's about talking to your customer and fulfilling the needs they have. And when you can't, just tell them that. Don't hide from that. And that concept, for 26 years, we did that, and just not bragging about it, but I don't know if you're familiar with Gartner Consulting, which is like big IT consulting. Gartner is a big, big group.
Okay.
So they give out customer experience, the best customer experience for companies. So I won that award in 2011 for being the best customer experience in the Western hemisphere of the world. So to tell you, we were a cement and concrete manufacturing company, and people said, how could you have the best customer experience? But it's all about very simple things. So of course we struggled a little bit, but life is always about simple things. Keep it simple. You can read all the books you want, but
Sure.
always try to keep it simple. Don't get complicated. It's not that complicated.
Keeping it simple is often the best and the most effective answer. So, yeah. Well, then, I appreciate it so much. Thank you for your time. I know it's valuable, and hopefully, and I know the audience will get some good stuff out of this. Yeah, just really appreciate
it. Please feel free to give my contact information.
Go ahead and shout it out real quick. What is it?
My email is ven.bontha@gmail.com. Ven.bontha, Bontha ven@gmail.com. And my phone number is 713-97704. Please text me and then we can set up, ask me anything you want.
All right. Thank you so much, Ven. Really appreciate it.